My first
You,
live
Tim
on
Hart, you are famous.
YouTube. You're famous.
I don't
You
know
got the
about
famous. You're going.
that. Listen, nobody's ever gone to a restaurant where I live and walked up to a random stranger and said, "Do you know Brian Lovell?" And they said yes. But I can say that about you.
Oh, it's hilarious. I appreciate that. That's funny. All right, let me turn ourselves down there. Okay. So, all right, we are up live. So let's get started on this. We'll just jam for a few minutes. You cool, Brian?
I'm cool. Let's go.
All right. Hey, my name's Tim Hart, branch manager of Van Dyke Mortgage here in Fort Myers. This is our first YouTube live. It's kind of a little test. So if you're logged in from the email I just sent out, do me a solid, drop a comment so your buddy here can test a few things out and see how to do it. I'd appreciate it. Talking to you, Travis Smith, comment on this. But I got Brian Lovell, what we call you, our national sales manager, right?
Yeah, something like that.
I'm going to call you my friend instead.
That's perfect.
All right, cool. So Brian, a lot of turmoil, a lot of crazy stuff going on out there in the world, especially, well, in the world, but specifically you and I are talking about our mortgage world.
Yeah.
And mainly FHA loans is what's been getting a little crazy, right?
It's a little crazy. It's interesting because you're probably getting questions and comments and concerns about, is FHA loans going away? I'm assuming that's where your question's going.
Well, mainly, yeah, I'm gonna get into rates, but you can touch on that too, man, because I've been hearing it. Same thing.
Okay. Yeah, I mean, I'm certainly not going away.
Right.
Obviously there are changes to that program. That's probably what you're wanting to talk about a little bit. But, I think one of the things I love that you do, Tim, is you are an educator, not a rumor blaster, so to speak. And, a lot of agents out, and I'm seeing it on Facebook and on other social media platforms, are saying a lot of things that they're really uninformed about. Mm-hmm. And, it's not a program that's going away. There's certainly changes to it. And there's reasons for that. And we can get into it on this call if you'd like.
Yeah, well, you're right, man. We've been seeing, you see it, I see it, like Federal Reserve went to zero, right? And next thing you know, they're advertising 0% rate. And I get it. Like, I'm not knocking any of them for that, but like lately, dude, the rumors, FHA is going away. And, are you closing loans? I heard this and heard that. And you're right, man. It gets wild out there. So I mainly wanted to get in. First off, let's just get this out of the way. FHA's credit score, if you're watching this, they did not decrease or increase their credit score. This is a lender issue, right, Brian?
Correct. Yeah. So you're going to see each individual lender change what essentially we call overlays, right? So in other words, we're lenders are putting in guidelines of credit scores that they're comfortable with, or maybe reserves, different debt to income ratios. And it's essentially based on risk. And here's why. So a lender like Van Dyke Mortgage, we're a Fannie Mae, Freddie Mac, and Ginnie Mae seller servicer. What that means is we can sell our loans directly to those GSEs without having to rely on broker dealers. Right now, there aren't a lot of investors in the market that want to buy these mortgage securities because, well, if you watch the news today, 3.5 million people filed for unemployment last week. In the last 2 weeks, we're up over 6.5 million in unemployment. And so as an investor, do you want to take a risk on buying those mortgages when they may be folks who are going to be unemployed or going to go into forbearance or whatever it may be, right? And so for us, if we weren't a Fannie, Freddie, and Ginnie Mae seller servicer, we'd pretty much be dead in the water right now. But because we are, we're able to sell these loans directly to those GSEs. Now, here's the difference between a conventional loan and, say, an FHA loan. On a conventional loan, we only have to remit payment, principal and interest, when the borrower makes payment. On a Ginnie Mae loan, which will be FHA in this case, we have to remit payment regardless of whether the borrower remits payment or not. So as you can tell, that's a lot riskier in the current climate that we're in, because you don't know whether these borrowers are going to be unemployed or underemployed. Underemployed would be maybe they're on furlough or they're working less
hours cut or whatever,
or something like that, right? And so it becomes a little bit riskier. So lenders are starting to put overlays on credit score, right? And credit score is simply a layer of risk, just like months reserves. And reserves are, after you close your loan, how many months of savings do you have equal to what your mortgage payment is? So if your mortgage payment is $1,000 a month and you have $3,000 in assets after closing, you have 3 months reserves. And then one of the other layers of risk would be DTI, or debt to income ratio. Take your total income versus your total debt load, and whatever that percentage is what you get for your debt to income ratio. So those are the overlays that you're seeing lenders put in place based on their appetite for risk in the current environment that we're in.
Yeah, you absolutely just crushed that answer, bro. That was great, man. And what's cool is you mentioned reserves and debt to income ratio. So tomorrow, I just did it right before you and I jumped on this call, but I did a whole video on what is reserves and DTI and how is it going to affect your FHA loan. So we send that out tomorrow because a lot of people out there don't really know what reserves are. By the way, reserves, you guys, can't be a gift. You got to have your own money. What's that?
It cannot be a gift.
Yeah. Oh, I thought you were going to trump me right there, bro. I thought I like misspoke on a live video. That would not be good, but it can't be a gift. So they got to have this money. And the other thing we touch on is discount points, man, with these the pricing on these FHA and VA, but mainly, FHA is what a lot of people are talking about, that we're going to have to be charging, 3.625 on a rate, but you got to pay a point and a half, 2, whatever it may be to get that rate. So that's another big thing in our industry right now. And that's going to be going on for probably how long?
I say we're probably going to see that could be a couple of weeks to maybe even a few months. We might be looking at seeing that for the next 6 to 8 weeks. And again, part of the reason for this too is in our business, what's considered an early payoff, which means a borrower borrows money from us today to finance a home, whether it's a purchase or a refinance, and rates take a drastic dive down. And now a lower rate looks more attractive, and 2 months into their new loan, they refinance it.
Right.
Well, that's bad for on the lender's side, right? Some pretty heavy financial penalties to do that. And so if we go ahead and offer the lower rates now with borrowers paying premium, it's less likelihood that they're going to refinance into a lower rate down the road. And I think, I'm no economist and I have no crystal ball, but I feel like the government wants to keep interest rates low. Right now it's good for the economy. And I think right now rates on all products are artificially high because of the capacity that lenders are dealing with right now and the uncertainty of the economic picture, again, with, unemployment.
Mm-hmm. Yeah. I had heard someone say they thought it was going to go almost to the entire year, but you realize that the majority of people out there, myself included, we're just all guessing, when's it going to end? When's this going to happen? No one really knows. I mean, we're all just trying to give it our best guess, right?
Yeah, absolutely.
Cool, man. Well, do you got anything else you want to add to what we talked about or for FHA loans?
No, I mean, I think we pretty much covered what I would consider would be the necessary things people would want to know.
Yeah. And if you're watching on YouTube, all two of you that logged in, thank you. One of them's Ashley. So
she's in the other room.
Yeah, she commented on it, said test with my name on it. It's me. That's hilarious. She's not in the other room. She's working remote. My whole team's remote.
Okay, good.
Yeah. No. We're here doing hunkering down. So if you happen to watch this, guys, you got more questions, concerns, I put out a ton of content on this channel as well. Connect with me. Always here to help. If you have a mortgage question, give me a call on my cell, 239-910-5668. Brian Lovell, appreciate you jumping on, sir. You're a busy dude, and I value you. Thank you.
Appreciate the opportunity.
You got to say something though. You got to say your ending. You say it all the time, Brian.
If there's anything that you need, we're always here to serve.
Yeah. All right, man. Thank you, dude. See you, buddy. Appreciate it.
Bye.
I think I just ended it. No, I didn't.